The Bank M&A outlook for 2023 will be impacted by several events that are occurring right now. One, banks are concerned about whether or not the credit issues that have not yet arisen will actually show up. And that, I think, is giving them some pause about whether they want to go through transactions. The pricing of their stocks have sort of declined as well as some of the turmoil in the marketplace. And that's giving them this whole concept of to build scale. A, do we need to build scale? And then sort of B, after that, is it best to build scale on our own in markets that we can control with teams that we recruit, or to go out and buy them? And I think that's why we saw some of the results in this year's survey. I think the desire to attract low-cost deposits will have a positive impact upon bank M&A going forward. Banks right now are experiencing a couple of things simultaneously. One, they're actually having some liquidity concerns that they didn't have during the pandemic when there was an excess amount of funds within the bank. Additionally, during that time frame, the deposit rates were so low, you were a bit ambivalent as to whether it was a core account, whether it was a time deposit, whatever it may be. With the rapidly changing interest rates that we've experienced over the last several months, we're seeing a real interest in being able to find those core accounts. If in your marketplace you cannot attract those kinds of deposits for whatever reason, a bank M&A transaction may be something where you can get to those. What I do think will happen, though, is we're going to spend more time in due diligence on those accounts, understanding what really makes up the composition, where they're at, how long have they been with the bank, and are they really driving the value that we think is there before we're willing to submit to the deal. To avoid losing customers after a deal closes, an acquiring bank really needs to communicate often and frequently with their customer base. I think when a change occurs, it's a natural time for customers to reevaluate their banking relationship. You have to make sure that you give them no reason to think about changing or shifting to a different institution. And so you have to communicate frequently with them. You have to make it easy for them to do business with you. You have to have dedicated hotlines set up to answer questions. And so you have to sort of make it seem like it's pretty seamless to them. And you have to start this well in advance of the announcement of the deal. During due diligence, you should develop a plan for being able to communicate with the customers. How are we going to retain them? Are there key customers that we need to communicate with directly? And plan that out. Otherwise, you have the risk of losing the thing that you wanted to acquire the most, which was the customer base. The retention of key staff is a critical success factor for most bank acquisitions. So as you plan out over the next year a transaction you might like to be involved in, understanding that talent pool that you're looking to acquire is going to be key to making sure that you achieve the results that you want. That includes identifying those members that are critical to the success, understanding what they offer, and then being very open with them about what their role will be, what they bring to the combined organization, and making sure that they understand fully what is expected of them and what they can achieve together as a combined organization. That kind of communication, I think you have to start planning that out even during due diligence to have a communication plan so that you hit the ground running when you announce a transaction, because uncertainty does not breed confidence, and there's going to be a lot of uncertainty for the associates of the acquired bank. In all of our past surveys, there's always been this divide between what sellers want in a transaction from a pricing standpoint and what buyers are willing to pay. I think it's become a little bit more pronounced during this current year and should carry over into 2023 for a couple of reasons. One, bank stock prices have declined as the market has been in turmoil. Now, it's coming back as a result of the rebound in the stock market. The changing environment of the interest rates has positive impact for margin for banks. And so I think that will help as we get resolution of bank stock prices. That will make it easier for buyers to do transactions. But then we also have a couple of unknowns that have yet to be resolved. The first is credit quality. Everyone seems to expect that there will be a credit decline occurring sometime in the next 18 months. It has not yet appeared, and so that, I think, is factoring into some of the prices that buyers are willing to pay. Additionally, we're in a kind of unique situation where the rapidly changing interest rates has caused the fair value of your investment portfolio to decline significantly, and so it's having an impact upon what the actual GAAP equity is. In other words, when I look at your financial statements, what does your equity section say? And I think that's changing the math of actual transactions. And so if you have in your mind a certain multiple that you're sort of focused in on, that multiple is now different just because we've changed the denominator thanks to this change in the investment securities. And so resetting that, I think, is something that buyers are working with sellers to try to help them understand so they can bridge that gap. The survey indicates that bankers are concerned about the national economy. Interestingly enough, though, they're not as concerned about their local market. So what does that mean for Bank M&A in 2023? Maybe it means that we'll have more in-market transactions because I understand what the market is and I have more certainty around where that market is going. If you are going to be interested in acquiring outside of your local market, I think in the due diligence process, you really have to dive in to understand these new markets from a demographic standpoint, from where the growth is coming, and the economics to make sure that the transaction that you're hoping will spur growth for you will carry on. Now, how that might impact Bank M&A in 2023, my expectation is that it'll be consistent with last year. It'll be an active market, but it won't be a strong deal volume necessarily. If we see some of the economic uncertainty resolve itself and the national economic picture becomes more certain, then that could change and we could see a pickup in transactions perhaps later in the year once we understand the picture more clearly.